Welcome to the new era of video creation with AI stock picking. Let's start it. Here is the content. Broadcom is one of the most influential semiconductor companies in the world. With a broad product portfolio spanning networking, broadband, wireless communications, and storage, Broadcom is integral to several high-growth industries, including 5G, data centers, and the Internet of Things, IoT. The company's diversified business model is a key strength. While many semiconductor companies focus on a single segment, Broadcom provides critical components for various industries, from mobile devices to enterprise-level data solutions. This diversity helps mitigate risk and provides stable, consistent cash flows. Broadcom has been benefiting from strong demand in the 5G and data center markets. As businesses and consumers continue to move toward faster wireless technology, Broadcom's products are integral in enabling these transformations. The company's wireless solutions and infrastructure products are also central to the growth of global data centers, positioning Broadcom at the heart of digital infrastructure expansion. Broadcom's proven ability to generate high margins, combined with consistent cash flow and solid execution, has made it a market leader. But like any high-growth company, investors must carefully assess when to buy, especially considering the current valuation. Let's dive into where the stock stands today. Broadcom is trading at around $950 per share as of May 2025, with a market cap of about $625 billion. The company has benefited immensely from the growth of 5G networks and cloud computing infrastructure. Broadcom's chips are a critical part of 5G base stations, routers, and cloud servers, all of which have seen rapid growth in the past few years. However, Broadcom's valuation, at a PE ratio of approximately 30x, is higher than the industry average for semiconductor companies. While this still reflects the company's solid growth prospects, it does indicate that much of the future growth potential has already been priced in. The PE ratio suggests investor confidence, but also the risk of overvaluation, especially if the company experiences any slowdown in its key markets. High expectations are baked into Broadcom's stock price. Investors are betting on continued growth from 5G, data centers, and networking. But any hiccups in those markets, or broader economic conditions, could lead to increased volatility. Broadcom's stock price could pull back if growth slows down or if competitors gain more market share. Despite this, Broadcom remains one of the most well-run companies in the semiconductor space. But for long-term investors, understanding the right time to buy is crucial. Let's take a look at a more attractive price range for entry. The ideal entry point for Broadcom stock is between $850 and $900 per share. This price range brings Broadcom's PE ratio down to 26-28x, which is more in line with the company's growth prospects and the semiconductor industry's average. At these levels, Broadcom's stock becomes more attractive for long-term investors. While the company's growth prospects remain strong, a lower entry price provides a better risk-reward balance. The stock has historically traded lower during market corrections or after weak earnings reports, so waiting for a pullback could significantly improve your entry price. In addition, buying Broadcom at this price range provides a stronger margin of safety. With the stock currently priced for high growth, waiting for a price correction reduces the risk of overpaying for the company's future growth. Entering the stock when it's undervalued compared to its growth expectations can offer more upside potential in the long run. The semiconductor market is highly cyclical, and Broadcom's stock tends to follow broader market trends. Any signs of slower growth in the tech sector or global markets could trigger a pullback, offering an opportunity to buy at a more favorable price. Let's now explore why waiting for this better entry point is the right strategy. Broadcom stock is currently priced at a premium, largely driven by optimism around 5G deployment, data center expansion, and cloud computing growth. While these are strong drivers for future growth, the stock's high valuation means that any slowdown in these sectors could result in a sharp price correction. The semiconductor market, while growing, is cyclical. Broadcom's performance is closely tied to the overall health of the tech industry and broader market trends. For instance, any economic slowdown or geopolitical tensions affecting global supply chains could negatively impact Broadcom's stock price. Furthermore, Broadcom faces increasing competition from rivals like Qualcomm, Intel, and other semiconductor manufacturers, which could erode its market share, particularly in wireless and networking chips. This competition could also limit Broadcom's ability to command high margins. While Broadcom's long-term growth prospects are still intact, it's crucial to be patient when buying the stock. Market volatility and the cyclical nature of the semiconductor market will likely present opportunities to buy Broadcom at a lower price. This will help you manage risk while still benefiting from the company's leadership in high-growth industries. Broadcom is a key player in some of the most exciting growth markets, including 5G, data centers, and cloud computing. The company's diverse product portfolio and strong position in networking and wireless communications make it a compelling choice for long-term investors. However, Broadcom's stock is currently priced for continued growth in these areas, and the company's PE ratio reflects high investor expectations. For long-term investors, it's essential to manage risk by waiting for a price correction to get into the stock at a more favorable valuation. The ideal price range for entering Broadcom stock is between $850 and $900. This would offer a better risk-reward balance, giving you exposure to the company's future growth while minimizing the chance of overpaying. By waiting for a pullback, you can capitalize on the upside potential from Broadcom's dominant position in high-growth industries without risking a significant loss if the stock faces short-term volatility. Timing your entry will allow you to ride the wave of Broadcom's continued success, but at a price that offers a stronger margin of safety.